How's it going, everyone? Today I am going to talk about liquidity, mainly about external range liquidity and internal range liquidity. With this, uh, if you learn this, it's gonna get easier to find your drawn liquidity and the narrative where price is most likely going to go to draw, external draw. So today I'm going to talk about external range liquidity and internal range liquidity. First of all, what I want to say is that let's talk about external range liquidity. What is an external range liquidity? External range liquidity a is a big range that you have. The range that you have, the dealing range, is your external range liquidity. And I am going to, when we go to the explaining this on the charts, I'm going to talk about why I chose that range, that dealing range. Why do I feel like this is an external high and this is an external low? So what we need to know here is that after we have an external high and external low, we find that all those lows and highs, those swing highs and swing lows inside of this is an internal. All these lows and highs are internal. And what many don't teach is that the fair value gap, the resting here in the discount, you can use this as a bullish example and a bearish example as well, doesn't matter. Uh, so in this example, I have a bullish example here. Price retraced into this fair value gap. What is this fair value gap? This fair value gap is an internal range liquidity. Yes, it is an imbalance, but if you go on a lower time frame, this is liquidity resting in this fair value gap that I'm going to show you when we look on the chart at the charts. The idea here is that after we retraced into this internal range liquidity, the next target is external, right? So we retraced into this fair value gap. This is your internal range liquidity as well. After retracing to this, price expands into the external range liquidity. After we break the high of external range, after we break this high of this external range liquidity, this low from this low to the high that we make up here is our next external low and an external high. As simple as that. What I forgot to mention in the video was that price moves from internal to external and from external to internal range liquidity. This is necessary to know when you're trading. Now let's go ahead and look at the charts. So as you can see, we have this external low down here and this external high up here. Why do I mark this as an external low and this is an external high? Why is this my dealing range? If you look down here, we manipulated the low, reacted off an imbalance down here, and we displaced up. So the just because we displaced up here, this becomes my dealing range. So we have premium here, up here above the equilibrium, and we have discount zone here. So what do I expect? I expect price to come into the discount, rebalance the price, mitigate the internal range liquidity, which is this fair value gap. This is our internal range, and from this internal, I expect price to take out this external range liquidity up there. So as you can see, price retraces into the equilibrium, below dips down into the discount, and reacts off of this internal range liquidity and takes out external range. As simple as that. So if we look at this example on Euro USD chart, as you can see, we have our dealing range from this swing high to this swing low. Why is this our dealing range? Because we displaced from that swing high and we took liquidity out from this with this swing high as well. So after this displacement, I expect price to rebalance the range, go take out this internal range liquidity, this buy side down here, and also mitigate the internal range liquidity, which is a fair value gap in this case, and then seek lower prices to this external range liquidity down there. So if we look at this, price reaches up to the internal, takes out this buy side as well. We're in premium, and I expect the price to go lower from here. Now that we displaced, we have another range here from this high to this low. We have another range. Price retraces into the premium of that, into the internal range liquidity up here, which is a fair value gap. And then I expect price to reach down into the external low of this range. And also we left a relative equal lows, which is higher probable that price will most likely going to take this lows down here. Yes, as we did. I want you to guys look at this example as well. Previous examples, I showed you the price retracing into the premium, into the discount, but I want you to guys look at this example as well. But sometimes price doesn't need to go deep into the discount to react from that. Why? Because after we manipulated the low and we displaced up, this is not like a big displacement. Like we didn't take this high out or retraced into this fair value gap there, right? So what do we have here? After price made a fair value gap, which is an internal range liquidity, I expect price to react and respect this bullish fair value gap. And what do we have here as well? We have high, low, and higher high. This is a bullish breaker block. So I expect price to respect this zone and don't retrace all the way down into this fair value gap and continue going higher. So this is our internal range liquidity, and this is, well, let me mark this out, from this low to this high. This high is our external range liquidity point. So as you can see, price consolidated and finally displaced above that high. So what price made here is that we have our from internal to external range liquidity. This low was internal after displacing and taking out external range liquidity, breaking out of here. This low became our external low, and I'm waiting price to make an external high here. So if price is going to retrace now, I'm going to wait to take this internal low, and fill this internal fair value gap down here. So take that internal lows out and fill this imbalance here, which is internal range liquidity in this case. So expect price to move lower, take all this generated lows, and from internal we go to external range liquidity up there. Okay, what I want to do now is to analyze the Euro USD chart on a higher time frame now. As you can see, I'm on a daily time frame of Euro USD, and I want you to guys I want to show you guys my external draw and internal draw as well. So as you can see, this I manipulated this short-term high. If you know what short-term high is, an intermediate term high or long-term high, or vice versa, go look at the video that I uploaded previously, which is called Real Market Structure. So here, as you can see, from this high to this low, this is my external high, and this is my external low. What do I expect? What did I expect? Price retraced into this internal range liquidity, and after that, reacting from that and taking out this external range liquidity down here. If price confirms this on the lower time frame. Hopefully, you guys enjoyed the video and learned something new. If you did, leave a like and subscribe because it helps a lot and keeps me motivated and stuff. And as always, have a great trading. Goodbye.